Hi everyone, let's cover my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the highest probability scenario on the 4-hour time frame, which is the bullish scenario. Here we still look for more upside to come after a red wave of 4 is finished, and then we look for a wave of 5 towards the upside. After this wave of 5 is finished, we then look for a bigger retracement to the downside. Now, in a bit more detail, you can see that we started this structure with multiple 1-2s of a different degree. So the red count is the highest degree Elliott wave count on my chart. 1, 2, 3, 4, 5. Inside the red wave 3, we have the yellow subdegree count. So inside red 3, we have 1, 2, 3, 4, 5 in yellow. Inside the yellow 3, we then have again a lower degree green count, 1, 2, 3, 4, 5, etc. So basically, red is your highest degree Elliott wave count, and then each color after is a lower degree Elliott wave count. And you can see that the white count here is the lowest degree on my chart, 1, 2, 3, 4, 5. Now this creates a typical impulsive structure. This is also something we really like to see. We start with a bit of a grind. These are your multiple 1-2s. Then you get your push towards the upside, and then you get a grind to finish your impulsive structure with multiple 4-5s. 1, 2, 1, 2, 1, 2, 1, 2, 3, and then eventually you get 4, 5, 4, 5, 4, 5, and then afterwards a bigger retracement to the downside. Now you also see vertical lines on my chart. The vertical lines are color matched with their respective Elliott wave count. And what these FIB times show you is how much time it took to form the respective wave 4 against its wave 2. So in a bit more detail, let's go to the white count here, right? And you can see the vertical line on my chart, which is a FIB time that is taken from the start to the end of wave 2 to the end of wave 3, comparing 2 in time with wave 4 in time. And you can see that this wave 4 here, internally then W, X, and a Y, wave 4 finished around the 3 FIB time, which is fine, because preferably a wave 4 is finishing between the 1 and the 4 FIB time, ideally, right? So a 3 FIB time, perfectly fine. Then we have the blue count, 1, 2, 3, sideways 4, and wave 5. And you can see the blue wave 4 here finished nicely after the 1 FIB time, right? Taken from the start to the end of 2 to the end of 3, comparing 2 with 4, as this wave 4 finished around the 1.886 FIB time, right? Almost twice the length of wave 2, perfect. Now then we have over here the green wave 4 matching the green wave 2. So we take a FIB time, start of 2, end of 2, end of 3, comparing a green 2 with a green 4. And you can see here that green 4 ended around the 1.236 FIB time, which is also, again, very nice. Preferably, and most commonly, a wave 4 is longer in time than wave 2. And you can see basically on my chart, every wave 4 is longer than its wave 2, which is good to see. And then we have the yellow wave 4 here, matching the yellow wave 2. Now again, we take the FIB time from the start to the end over here, right? And you can see wave 4 ended around the 2 FIB time. And then we have our move to the upside, the all-time high, creating our wave 3. And then you can see the red count here on my chart. Now, as you can see, every wave 4 so far finished after the 1 FIB time. Again, that is most common, as most commonly a wave 4 is longer than wave 2. So in other words, preferably this wave 4 finishes after this vertical line on my chart, which is the 1-to-1 Fibonacci, FIB time, taken from the start to the end of 2 to the end of wave 3, which is sitting on the 18th of February this year. I also put the 2 on my chart here. As you can see, most of the wave 4s ended between like the 1 and the 2. So the 2 is the 19th of March. Wave 4s can be longer, but hopefully not longer than the 4 FIB time, but that's months away, right? We have a lot of time to analyze that. So in this case, inside wave 4, we then preferably look for a corrective structure that can end wave 4 after the 18th of February, meaning continuing this range for at least another couple of weeks. The target for your wave 4 on the chart here, taken from the low of 2 to the high of 3, is the 236 to the 0.5 Fibonacci. 95.9K to 80.9K. Invalidation, the 0.618 at 74.2K. Now, after a wave of 4, we then want to see an impulse up in a wave of 5. A nice 5-wave structure, 1, 2, 3, 4, 5. And preferably, this wave 5 is finishing between March and October. If you haven't done this yet, please check out the high time frame and macro playlist on my homepage of the channel. Check out the latest video where I also analyze the monthly time frame. And based on the monthly time frame analysis, we preferably end this bull market somewhere between March and October. If this here is the end of your bull market, well, that's clearly not the case, right? Because then we ended the bull market in January and not in March, October, right? However, this over here, wave 5, can nicely end between somewhere March and October, where this wave 4 is finishing in February or March, and then it of course takes time to form your wave 5. So therefore, right, that adds probabilities to this bullish scenario as well. Now, if we then zoom in to this wave 4, right, we have this structure to the downside, higher probabilities on the lower time frame. It looks corrective, and then this is currently what I am thinking. Now, we have to, again, have a 3-wave structure. And you can see on my chart, I then count this as a first structure to the downside here, with this then being a 1, 2, 3, 4, and a very long wave of 5, creating a 3-wave structure here, and then an ABC, possibly some WXY, but it doesn't really matter. By all means, I prefer this as a 3-wave structure here. And then either a WX and a Y or a BC, which is a flat structure. Now, mind you that if you take out the all-time high, right, before the 18th of February, right, minimum, the probabilities are higher. You're looking at a flat, not continuation, just that I've at least said that, right? Now, for your wave X here, your minimum target is already reached, which is the 618 over here, right, at 102.4K, 886, generally a maximum target, 107.2K. And then for your wave B, we have the 1.236 and the 1.38, 113.6, 116.2K as the most common target. Now, these are 3-wave corrective structures, either a WXY sideways structure, WXY or sharp, WX and then Y, right? Or a flat, A, B, C. What we get very much depends on what's happening over here. Because preferably this wave X and this wave B, or this wave B, and after at least the 0.382 Fib time, which is the 8th of February, which is not where this high is made. This high is, of course, made far before the 8th of February. So in other words, probabilities are higher here that X or B are not yet finished, right? And we still need more time to analyze exactly what structure is forming here, and if we're looking at an X or if we're looking at a wave B for a potential flat, right? You can have, of course, wave X can be any corrective structure. Wave X can be triangles. Wave X can be a flat. Wave X can be a zigzag. Wave B, however, is by far most commonly a zigzag or double zigzag structure, right? So a sharp move towards the upside. Now, after your wave B or your wave X, we then look for price to move towards the downside once more in a wave C or Y and reach the target area here, preferably, of course, inside its time target as well. We do have some supports and resistances that I have both to the upside and the downside. Now, first of all, we hit support here at 91 on top of the 886. Remember the video of yesterday? Very nice. Then we had resistance here, a weekly and daily naked point of control. Nice rejection at 102K-ish, right? To the upside here, still some more resistance, 104.6, 105. And then over here, you can see that the wave B flat target area is matching with some Fibonacci and KRZ, that's for another time, resistance area. So that's quite interesting. And to the downside, we first of all have some support here, 94.9, 95.6K. We currently are very close to a daily here at 97.6. I didn't really mark it as a box. The boxes generally are the stronger support and resistance areas, and that is because the daily is a little bit solo. It stands very much by itself, but still an important level to remember. And then to the downside, on top of the 0.382, we have support here between 86.9, 87.4, and then we have the daily gap high. So if I would go to the daily time frame, you will see we have a gap here, and the top of the gap is this low at 85.010. Right? And then, of course, after touching support, we look for price to move up. Now, currently, because of this structure, we then have WXYABC, right, on the chart. Alternatively, there is still the potential for a triangle. It's just too early to talk about triangles, right? A, B, C, D, E, and then you move towards the upside, right? In that case, you won't take out the low. Also with a sideways WXY, you don't necessarily have to take out the low, right? It's not a requirement. Very much, again, depends on the structures to form. But just know that a triangle, yeah, it's an idea, but it's way too early to talk triangle. So a WXY, either sideways, WXY, or sharp, WXY, and for a sharp double zigzag, WXY, you don't want price to hit the 0.7 Fibonacci, which is sitting at 103.9K, right? So if price would move towards the upside a little bit more here and touches the 0.7, then the probabilities significantly decrease for a W zigzag X and then a Y zigzag. In other words, the probabilities then increase that wave 4 is going to be a sideways corrective structure, not a deep corrective structure. You're going to be looking for W, X, Y, right? Or you have the flat, A, B, C. These are both very sideways structures, or the triangle, of course, right? Okay. Lots of talk about this bullish scenario. Remains the highest probability scenario from an Elliott wave point of view. Then the bearish scenario, will be done with this very quickly. The bearish scenario requires me to count this move towards the upside slightly differently, where we then end wave 5 at the all-time high over here. Now, in this particular case, you also have wave 4s that are shorter than their respective wave 2s. For example, if we look at the yellow count here, then you take a fib time from the start to the end of yellow 2 to then the end over here of your yellow 3, toggle on the 1-to-1, and you can see that this wave 4 here is significantly shorter in time than wave 2, lowers the probabilities. It's not the only wave 4 as well where that happened. So the probabilities are just not as high for this scenario, and also this scenario ended in January, not between March and October as preferred. And lastly, if this is indeed an all-time high top, we want to see an impulsive structure to the downside, right? Because we need a big retracement. So preferably, we want to see impulses, which based on this structure here, the only structure really that remains would be a multi 1-2. You have a 1, a 2, then another 1, another 2, and you get a big wave 3 to the downside. But your first wave 2, this structure here, is 11 times longer than your wave 1, which is incredibly uncommon for a wave 2. It's more common for corrective structures than for impulsive structures to have such a big difference between its wave 1 and 2. So it also affects the probabilities on the chart. Other than a multi 1-2, there is still alternatively an expanding diagonal, 1, 2, 3, 4, 5, but expanding diagonals are incredibly rare, never preferred, unless basically everything else fails, which is not yet the case, right? Now, the invalidation for this scenario is price taking out this high at 106.4K. Finally, we look at the news here as well. We have some news today, 4 p.m. Make sure you trade safe. Also on Wednesday and Friday, some high impact news. So just take care of your positions, manage them well, especially with the volatility. Generally, what happens in bull markets, which is unfortunate, but people make profit on the way up and then they lose everything again once price starts ranging in the 4-5s, because the 4-5s tend to be complex sideways structures. People don't really know what's going on anymore. So just make sure you trade safe, be very patient. There's always going to be an opportunity. And if we then look at the probabilities, then here they are on my chart. Probabilities are higher for the bullish scenario until proven otherwise, which basically means moving far below this low here, and 74.2k is really the invalidation for your wave 4. Probabilities are higher. This structure down here is corrective, not impulsive. Probabilities higher to finish the bull market between March and October, which is what this represents. Probabilities higher to have a longer sideways corrective structure, right? And only at a later stage move up for a final impulse in this bull market, which then is your red wave of 5 to higher targets. So here you go, probabilities, bullish scenario, bigger wave 4 range is what I keep an eye on. And then on the number 2 spot, right? By the way, the bigger wave 4 range is then at the moment WXY or ABC. And then the bearish scenario, that is your alternative scenario, lower probabilities. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.